Q&A box at the bottom of your screen. If you have technical difficulties or need assistance in any way, you can send me a direct message in the chat. This discussion is being recorded and will be available for replay later today on the NIRI website. And before we get started, I would like to thank Irwin for sponsoring today's webinar. Irwin is an investor relations software made for modern IR teams, combining smart investor targeting, comprehensive shareholder monitoring, the ability to track all of your IR activities, and access to research, estimates, and transcripts. Irwin gives you all the tools you need to execute a winning IR strategy. The result is more efficient IR teams, more investor meetings, lower cost of capital, and investor engagements that actually work to grow your business. And so now it's my pleasure to introduce our moderator, Mark Fasken, co-founder and COO of Irwin. Mark, all yours.
Thanks, Shannon. Appreciate it. Hi, everybody. Thanks for joining us today. Before we sort of jump into the panel, I'd like to just kick things off with a little bit about why we wanted to sponsor this session and really the thinking behind it. As an investor relations software company, we talk to a lot of IR teams every day, every week. And one of the most common themes that we hear is the challenge around measuring the impact of investor relations. Whether it's investor relations teams who are trying to get more budget or add headcount, people just seem to ask the question a lot of, how do I prove the value of what I'm doing? How do I measure the ROI? How do I communicate this back to management? And so we thought it would be great to get some people on a panel and really talk about how can we as our professionals do a better job explaining the value and communicating the value of the investor relations function. So we've got a few great panelists today, and so I wanted to start by going around and just doing some introductions. And we'll just go in the order on which I'm looking at everybody on the screen here. So maybe we can start with you, Steve, please.
Awesome. Thanks, Mark. Steve Rubis. I run investor relations for SOC Telemed. My background, I spent about 9 years on the sell side at Stifel, where I ended my career as a full analyst covering digital healthcare. And since then, I've done IR at 4 different industries, essentially DFT data centers, Caesars, Athenex, a small biotech, and now SOC Telemed. So my background spans, micro to mid cap and different structures as well.
Great. Thank you. Charlie?
Hey, Mark. Thanks. My name's Charlie Schumacher. I'm the head of communications at Marathon Digital Holdings. We're one of the largest, or on track to be the largest Bitcoin mining company in North America, at least it's publicly traded. I run comms, so we're actually a really small team. There are only 10 full-time employees at Marathon, which kind of always surprises people, but means we wear lots of hats. So I like to joke that I do all the words, I do all the PR work. I also do the investor relations work for Marathon. Been with the company full-time since July, but actually have been working with them for over a year because prior to Marathon, I was at a small cap investor relations firm in Orange County, California. Mostly small cap companies, and I sat on the sort of loosely defined TMT team. I was kind of the Bitcoin guy in the office, so carved a little bit of a niche for myself in that space, but worked on a lot of tech companies at my 3+ years at Gateway, and then eventually found my way full-time into doing comms for the Bitcoin world. So that's me.
Thanks, Charlie. And Alex?
Thanks, Mark. My name is Alex Jorgensen. I'm the head of investor relations at ProSec Partners, which is a 250-person financial services public relations firm. We have a team of around 10 people that really run day-to-day public company investor relations and help manage a larger team that focuses on go-to-market transactions, including SPACs, IPOs, and spinoffs.
Awesome. Thanks, Alex. Great. And so, I think as we go through this webinar, a few things that we want people to walk away with are, what are some of the metrics that people can track when thinking about how do they communicate the value of investor relations? What are the different reports that they could be generating, or what's the frequency in which they should be engaging with various members of the team? And so one of the first questions I wanted to kick off with was sort of asking you all really how you currently measure investor relations and sort of talking about some of the qualitative and quantitative metrics that you track. And so maybe we'll start off with Alex, maybe start with you. And, I know you work with a number of clients. So maybe just talking about what are some of the most common metrics that you're tracking working with your clients in a qualitative and quantitative perspective?
Yeah, thanks, Mark. I think, it is bespoke. It's different for each client because each client has different things going on, whether it's liquidity issues. And so for them, an investor meeting metric would be really tough. Or for some people, they're just recently public. And so we really have the need to get their narrative nailed down and to make sure that it's being received. So as you put it, there's quantitative and qualitative metrics. I would say we try to keep our metrics and how we're measured with what is in our control. And so ultimately, we feel really confident that we can identify a really nice set of investors that are strong targets, that we can schedule a number of meetings dependent on some of those inputs I just mentioned in terms of size, liquidity, interest by investors. And then we work with management to make sure that those metrics align with what they want to do. Whenever we start working with a company, we say IR is a long-term value prop. It's going to take us 12 to 18 months to pick up the traction and really be off into the races. But we should be measuring this on a quarterly basis because you have to answer your board, you have to answer to your teams. And so we measure a lot of mile markers along the way, but we always try to look at it with a long-term perspective in mind. And then some of the qualitative metrics is just, are we hearing investors repeat our narrative back to us, whether it's in meetings or proactively? And we've had some really fun, cool success stories on that front.
Awesome. So it sounds like the main quantitative metric that you guys are tracking is really that investors and high quality meetings and getting in the door. And then the sort of more qualitative is like, are we communicating the story? Is that being well received by investors?
I think that's fair. I would just add the sell side component. So many companies, especially with the SPAC boom, are looking for sell side coverage. And no one can really guarantee that the sell side is going to pick up coverage, but you can make introductions. You can begin building relationships. A lot of times you can begin investor engagement at conferences. And so those are some other quantitative metrics besides just meetings that I would point out.
Okay, great. Awesome. Thank you. Steve, what about you? What are some of the metrics that you're tracking right now at SOC?
Yeah, I love the quantitative and qualitative. I'm going to start with sort of my North Star, and then I'll branch into those two areas. And sort of the North Star I came up with was when I was at Caesars and sort of looking through the proxy. And I think there's a piece of real estate in the proxy that every IR person should strive to own. And that's where the proxy lists out the amount of interaction, a percentage of your shareholder base, how much you've interacted with during proxy season. And my view was, well, why don't we do that for the year of investor relations? And immediately you can get a sense, how do I compare to other companies across market cap, whether you're micro or large? Certainly, your situation will dictate your performance there, but just recognize that even a low percentage may actually be, a huge home run for you. And then when you get into the qualitative versus quantitative, I really stress the qualitative a lot. And I think the key here is, are you sort of tracking to be that strategic advisor or coach to the executive team? And, do they come to you? Do they call you up and say, hey, Steve, what's going on with the stock today? Or what do you think about this? We want to do this PR or think about things this way. That's a good way to know your impact internally. And then, externally, it's about having the right tools and right infrastructure internally in place to actually execute. That if you don't have tools like Irwin or something else that can provide you the background information on investors or a way to estimate share positions or possible share positions, you're sort of a boat that's dead in the water and can't do a lot of analysis. So from that standpoint, to wrap it up with the quantitative is really just the proof and the way you kind of prove this out to management. And that's through trading data or estimated position size that someone can take.
And so when you look at like trading data or estimated size, then are you actually then say sitting down and this is what I'm always curious about is like how specific do some people get, right? Like, are you sitting down then with management to say, here's a list, like you've talked about this before, Alex, like, here's a list of 25 investors that we really want to get into. And then are you sitting down and reviewing that, say, quarterly to say, okay, we've had some meetings, but have we made progress in terms of actual investments? Like, how specific is that goal setting exercise? I'll target that question at you, Steve.
Yeah, so, constantly we're going into the data. So at least for me, what I'll do is, when we have an event, whether it's a conference or something bigger, I'm looking at the trading data, maybe for the day after, the week after, month after. And what I'm trying to estimate is how many of the shares have I touched or management touched with those meetings. And the caveat I would give is the traditional ComScore caveat that everything is directionally accurate. None of this is a perfect science. And I think where the struggle you come into is depending on where your management team member came from, especially if they came from the buy side, it can be more difficult because they'll say, oh, Fidelity, they can take a 10 billion share position in anything. But, let's be realistic. Everyone has sort of diversification rules and no one's going to go all in on a position. And then beyond that, I think it's important, like if you're a strategic IRO internally, you want to have a list of people that you need to target regularly. And you need to know that because if you're going to do a capital raise, you're going to do some sort of event, you need to know who are the people who can take down shares or if a large holder needs to sell. And the idea is if you have an investment bank, this is a great way to start to do that targeting where you get the list of, everybody who owns DFT owns, Cyrus One, QTS, Equinix, and I can see, okay, American Century owns everybody but me. I need to get them on the list. I'm sure, Alex and Charlie, you probably have other tips and tricks as well.
Yeah, for sure. That's awesome. Thanks, Steve. And Charlie, what about you? Like, are there specific metrics that you're tracking right now, like sort of the North Star? Steve used that term, so North Star for investor relations as you think about what you're up to these days?
Yeah, there are. And it's interesting for Marathon. I think Alex mentioned this, but it's very different based on the company, right? The metrics have to be specific for the company and some are going to be more appropriate for others. So for Marathon, this is like maybe hard to believe for some folks, but basically a year and a half ago, we were a startup. We were just entering the Bitcoin mining space. The most of our growth that we at least announced happened in the fourth quarter of last year. And then a lot of those machines that we've purchased are coming online between now and Q1 of next year. So we're like right in the middle of kind of this big ramp. So for us, the company has gone through a very major transformation. And so a couple of the things, the data points that I've found that have been helpful and that I think our board has found helpful. One is how are we tracking against the broader market, but more specifically for us, how are we tracking against Bitcoin? Because we're one of the largest holders of Bitcoin among publicly traded companies. There's a lot of funds that look at us as a proxy for Bitcoin. So understanding how do we perform relative to the underlying asset that is like so important to our business is helpful for us. And then how are we performing relative to our peer group? So we're at a point now where there are actually several publicly traded Bitcoin miners. So are we overperforming, underperforming, or in line with the peer group is something really helpful for us to look at. For me, though, I think one of the most interesting data points has been the change in institutional ownership, because that's really proven out how much our story has resonated with professional or institutional investors for me. And on a year-over-year basis, from Q3 of last year to Q3 of this year, we went from 3% institutional holding to 35 to 40%. And so seeing that change and how drastic it was for me was a really solid proof point that people actually get our story and that they are paying attention to us. So that's probably the biggest data point for us that's been really helpful. And then that's backed up by anecdotes. So as kind of everyone said on this call, this is part art and it's part science, right? And there's lots of reasons for that. There's no buy button on your website for buy my stock, right? So you can't track sales conversion, which is really like the magic thing everyone wants in IR. And so I have to look at how the anecdotes have changed. And that comes from speaking to lots of people, taking lots of notes, gathering lots of data. And there's been a very, and I'm happy to talk about it if you want, but at least for us, there's been a very clear evolution in the conversation over the past year. And that's something that I think has then been reflected in both our performance relative to our peer group, as well as our change in institutional holdings. So I kind of look at both sides of it and see, is there a correlation between those two and do they support each other?
And how much of that change in institutional ownership has been driven, or where sort of those institutions have come to you versus where you guys have actively gone out to them and engaged in some manner?
So it's interesting too. That's actually maybe another way to measure this is it's kind of flipped. So a year ago, we were doing a lot of outbound work. That's actually why Marathon originally engaged with my former firm where I used to be, because we wanted more traction. We were going to go through this big ramp process. We wanted to do a lot of capital raising, and we needed to gauge a lot of interest. But that came with educating a ton of people on not just what we do, but like what is Bitcoin, right? So there was a lot of outbound that had to occur at the beginning. Today, I find myself in the very, I guess it's predominantly fortunate position that we get a lot of inbound requests. So I totally agree with what Steve was saying, where you definitely want to be proactive. You need to have your list of people you want to target. And as the business evolves, that list changes as well, right? So if you move from a growth to more of a value play, or if you're doing a lot of free cash flow, that list is going to be a very different, the type of investor is going to be very different that you want to target. But today we're in a position where we get a ton of inbound, and I can track all of that, right? And I can also track how the questions have changed in terms of their sophistication. And that's also just a proof point for me that there are people out there who know us, right? They're coming to us now as opposed to us going to them. And I think that change in of itself demonstrates, what we've done in terms of changing the conversation or having our story resonate with folks.
Yeah, sort of doing that proactive outbound, building the awareness, then communicating the right story, and then starting to drive some of that inbound is sort of that's a long-term play for sure. And
I should say, because other people said this too, it is a long-term game, right? We've been really fortunate in terms of how fast it's happened for us, and a lot of that is driven by, it's obviously our execution as a business, but a lot of it's driven by Bitcoin, right? And the interest that people have in that space. But IR is always a process, right? Alex mentioned that. Takes a lot of touch points with an investor for them to get comfortable with who you are and to eventually make an investment. And so I think always taking a long-term lens is very helpful in this.
Well, which actually leads sort of to the next point. And so you've all sort of talked about some of the metrics that you're tracking and sort of the qualitative and quantitative. I think one of the things that we come across often is misalignment, where the management team has a focus on one thing, sort of CEO and CFO maybe really focused on meetings. We hear that a lot. And the IR team is they're aware that that's something, but they're focusing their efforts, on other things. Or sometimes it's maybe that they both know what the priorities are, but maybe the priorities just aren't realistic. And often it'll be something along the lines of, our CEO or CFO is looking for 50 meetings a month for the next few months, and that just seems insane. And so I'm going to ask you, Alex. I mean, you obviously work with a lot of clients. I'm sure that through that onboarding process, you have to align on targets and set the right expectations. Like, how do you manage those conversations? How often are you revisiting some of those goals?
Yeah, I think it's super important, but I also think that in the process of alignment, we can kind of analyze ourselves into paralysis, right? When we are, if every meeting is equal, then we can all go register for a number of conferences and we can get meetings on the calendar. Now, if you've sat in those meetings with the management team, you know that not every meeting is equal, right? And because of that, we need to have some sort of triage and some sort of quality control here. And I think that, it's so similar to the benchmark for obscenity at Supreme Court, right? It's, when you see it. When you're in those meetings, you get this sense of, okay, is this a quality meeting, number one? But number two, where is my management team experiencing pain points? Where is my CEO tripping up in explaining the story? What are the questions that I'm hearing every single meeting that is not addressed in the materials I'm presenting? And when you start to do that, that's really the qualitative piece that you need to be able to bring into bring to the table in addition to the meetings. Now, at the end of the day, you're trying to solve a problem where a management team is trying to find a way to quantify your value, typically to the board. And so you don't want to ignore meetings or the number of meetings or these metrics that really are important. But I think that if you can convey the qualitative piece to this, it's a huge, it's a $1 billion industry to be a coach, to be a presentation coach, to help people. If you can make that a part of your job as an investor relations officer, I think it's a huge value add to your management team. And at the end of the day, really what you're trying to accomplish is that you have a team of people that are going to go to bat for you to the board and really understand the value you're bringing to the table. So I don't want to overanalyze just a number of meetings or something like that, because I do think that you have to triage which ones matter and which ones don't.
And there's actually a question that just came in, and it's sort of related to that, the question I was just asking, which is, and Steve, maybe I would direct this question at you, is how do you overcome expectations if they are perhaps misguided? Like I gave that example of, we want to get 50 meetings. The question was, if management believes you need to see more growth investors, but you have a lot of GARP investor meetings, how do you convince them that they're basically the same, or just maybe their expectations a little bit course correct?
Yeah, I think one of the things separate from this question. So two answers here. The first one is focus on the things you can control. So here's a 3-step process. Every seat has a different set of 2 or 3 key issues, depending on where you are in cap structure or whether you're a SPAC or a regularly traded stock. And figure out what those are, and then it's basic blocking and tackling. What do your materials look like? What does the call look like? And that content, because that's what really drives the must-see TV and getting people to engage with you. And it's all about that long-term outbound versus inbound. Now, to this question specifically, I think you want to train your executives on a philosophy that I like to view. I'm sort of style agnostic. My real litmus test is, can I have a reasonable relationship with the investor on the other side of the table? So if someone comes to me and they're angry and they just want to yell at me and don't want to listen to the narrative or understand the nuts and bolts of the story, that's probably an investor I don't want. Now, at the same time, that means I have to do more work to convert that person if they do own the shares. But I think what you need to do is just convince, again, based on your situation. And in this case, if you already have a lot of GARP, you need to go to a tool that will give you information that shows you, what is the classification of each investor in your roster. And if you can show them that, hey, 60% here is GARP, and I've done this at the data center where, we were a value play and it seemed that, we were under indexed to value investors. It's like, okay, wait a second. If we're trading at 10 times EPS in a 20 times EPS industry, that's a very quick way to say, look, we need to stop going after GARP. Let's look at the value people.
So I think one of the pieces that I would pull out of that is just leaning on the data, right? Like, so I think so, and sometimes I think it's a pretty common human thing. You set a goal, but it's not really based on anything, right? Like you hear that, hey, we want 50 meetings a month. I'm going to keep using that example. It's like, well, why? Based on what? Like, what is that going to produce for us, right? And I think to your point, using the data to look at it and say, like, based on the number of investors that are out there that are even a fit for us, like, is that even a realistic goal, right? And we did a webinar with NIRI, I guess a month or so ago, and talking about that type of thing, and talking about goal setting and leveraging data and looking at sort of the full market, like what is the total opportunity. Charlie, I was wondering on your end, like, how have you been in scenarios in the past where you've had sort of you've had to course correct maybe expectations from the management team?
Yes. Less, to be honest, less so with Marathon. I've just got a great management team, and they understand the process really well and kind of trust me to go out and do the communications work. But certainly I think so when I used to be in the agency world, there's a lot of folks who think Well, part of this question is how do you manage the ego of your CEO, right? You can't really get away from that. And that can be a challenge depending on who you're dealing with, right? There can be some personalities out there. But part of it is also, I think, making sure that people understand that the secret sauce is not just communications, right? At the end of the day, an investor is going to invest in your company because you're executing well, right? So you have to execute well, or none of this works. Is basically it. If you're executing well and people don't understand what you're doing, that's where investor relations is very helpful, right? Closing that gap is, I think, where a lot of the value comes from. But if there are challenges on the execution side of the business, that can't necessarily be fixed by just talking about good things more, right? So there's definitely a difficult conversation, I think, at least if I'm thinking about like the agency side, or if you are new inside of a firm, on making sure that expectations are aligned with reality, right? And if there are fundamental things about the business that need to be corrected first, like let's address that, right? That's priority. And let's figure out how to talk about that and talk about how we're going to change it and move forward. And let's tell that story, right? Let's talk about how we're going to move from A to B. So I think making sure that the expectations of execution are aligned are very critical. And then when it comes to the messaging of that, it's very simple in principle, maybe a little bit challenging in practice sometimes, but it's just integrity, right? It's just do what you say you're going to do. And I've always found that can be a little bit of a challenge with people, is they can be impatient. They don't necessarily want to focus on the real issues of the business, and understanding that this can be a process. Maybe this is going to take us some time to work through an issue we have or to turn something around. Let's focus on that. Let's focus on messaging that. Let's tell people how we're going to improve. So I think it has to do, I think for me, it's always starting with a very real and honest conversation of why do you need IR? What are we doing? What place is the business in? And how are we going to progress from where we are today to where we want to be tomorrow? And then let's figure out how to tell that story.
Awesome. That's great. Alex, I know that you and your team, work with your clients in a lot of different capacities, and you talked about sort of being that trusted advisor and helping with the strategy and everything. But I also know that a big component of it, I think, for any IRO or IR team is the marketing component. And I don't want to talk too much about meetings and everything, but a few times on this call, people have mentioned like measuring the value of these meetings. Like how do you and the team at ProSec measure that? Because I think what we hear a lot is like, we go to a lot of conferences, we go on a lot of road shows, we're not really sure, is it time well spent? So how have you been able to measure that? Because I think that to some degree, as the IR team and being that trusted advisor, if we can tell management, like, don't do this because it's a waste of your time, like that alone is a huge value add, right?
Yeah, and we talk about that all the time, which is that, and we said it earlier in the call, it's not every conference, not every meeting is created equal. And I think that to some degree, I mean, it depends where you are in your life cycle. If you've just gone public, guess what? You got 12 months where you got to go to all the conferences.
You do everything.
We're not in a beggars can't be choosers.
Yeah, can't be too picky for sure.
And I think that a lot of times, you have to manage that. But what you can do is, if you're going to these conferences, is by 6 months in, like I said, you start to get a feel for, oh wow, we added this slide in, it totally changed everything up. Or this CEO doesn't need a deck, and we shouldn't use a deck because the deck actually makes this meeting awful, and let's practice the 30-second elevator pitch that this CEO is going to absolutely crush. So there's ways that in the moment you can actually start to refine your narrative and refine your presentation. Like one of the things Charlie brought up earlier was that they're tracking their stock to Bitcoin. And what I love about that is that almost every management team I've ever worked with said, should we value your success based on if we trade up or down? And almost every time you have to say, no, like, I really hope not, because there's so many exogenous feature, like issues that are going on that are impacting that. But what I loved about tracking it to Bitcoin is that what you're doing is you're showing management and you're showing people that if Marathon is tracking with this with Bitcoin, then the comprehension of the narrative is salient. Like they're getting it. They're getting the story. They're understanding our position. They're understanding how much we own, and they're understanding how we're executing against it. And I think that similarly, you have to look at your peers and track against that as well. But in terms of meetings and really judging the value of conferences, what we like to do is take an inventory at the very least every 6 months and just say, hey, let's level set here. What meetings were just painful and let's take them off the list. And then it's our job to work with, in most cases, our covering analysts to make sure that meeting, we're not sending our CEO to a meeting with the same investor 3 quarters in a row. It doesn't always make sense.
Somehow then, like, do you come out of a roadshow and you're like, okay, we had 10 meetings and they're like, these were just the ones that were terrible and these are the ones that we'd want to have again. And do you get feedback then from the investors as well that you can pass on?
Yeah, absolutely. Yeah. And I mean, by the way, you not going to a meeting next quarter doesn't mean you lose the relationship with the investor. It's now on us as the IR team to keep that investor in the mix. They don't need to have access to my CEO and CFO in order to continue the relationship, right? I can send them earnings updates. I can send them material announcements when those are made. I can keep them interested in our story and up to date without necessarily making my management team have to, give up bandwidth to meet with them. And so I think you have to have a judgment there. And then, I mean, the key is that, the second most important thing to doing right thing is telling people you're doing the right thing, right? And so you have to be able to articulate that to your management team and do so in a way that 6 months doesn't pass and they don't understand what you've been doing. Because a lot of this does have to happen in the background.
Yeah.
Can I jump in with a couple thoughts?
Yeah, for sure.
So, wise DOR once said to me and my compatriots who are junior analysts, like, when you're up and coming, you need to take a phone call from everybody. If the janitor calls you about, Athena Health, you need to talk to him. So that's where the point of where are you in the life cycle matters. And like, if you're someone who's in a crisis or doesn't know who to target, then that speed dating of conferences is really important. And the other thing to stress here is that depending on your industry, there are certain tentpole conferences that you have to go to, whether you like them or not. So if you're a REIT, you have to go to NIRI twice a year. If you're in healthcare IT, you have to go to HIMSS, whether you like it or not. And the key here is to know who your good investors are, who your bad ones are. It's okay to meet people, several times in a row if you have to, especially if they own. But then 2 other pieces I want to throw out here based on what Charlie said is that, especially if you're a younger IR person and trying to educate your management team or get them to change, is 2 things. This is a game of chicken. Who throws the first temper tantrum, especially if you get into a negative situation with an analyst or investor. So you need to use your coaching tools to help calm those executives down, be that shock absorber, let them vent to you if they don't like what's going on, and then you can control in the background. And the other piece is about fact patterns. And this is something that's been really front and center for me here at a SPAC is that, there's so many public companies and so many investors that they expect you to do certain things in a certain order, regardless of what that is. And so the more you can learn or find the advisors to help you manage whether it's a management change or an earnings release or whatever that press release or piece of information is, doing it in the right 3-step pattern, 4-step pattern, and not succumbing to, oh, I'm the CEO, I want to do it my way. You're going to save yourself a lot, you're going to be valuable, and you're going to save that executive in his reputation.
Awesome. Thanks, Steve. Charlie, did you have something you wanted to add to that too?
Actually, just kind of going off of what Alex was saying about communicating back to management, I feel like that feedback loop is really key as well. And when it comes to conferences, I've always found it very helpful to be in all the meetings or having the CEO in the quality meetings, right? So like the IR person ideally should be vetting everyone that the management team is meeting with, because at the end of the day, they need to go run the business, right? But at the same time, like funds are going to want to meet with management before, like fundamental investors, right, want to meet with management before they're going to take a position, right? So you have to balance that. But being in constant contact, I think whether you're internal or external is really key, not just to prove your value proposition, right? So management sees what you're doing, but also so that you get to hear the story and understand how the business is evolving, right? That's one of the most important things that I've found. And for me, a really nice switch about being internal is having access to that, especially if you're in a space that moves quickly. So being as up to speed as you can be consistently on the business and what are the new updates and what's going on, so you can keep investors apprised of that and always demonstrate that you're showing traction, things are changing, you're thinking, 2 steps ahead. That's always been really helpful for me. And I think a lot of that has come with either sitting on calls, taking notes, or sitting in meetings, taking notes. And then that also allows you to be sort of an objective third party, right? It's kind of hard to evaluate how well a conversation is going sometimes if you're in the middle of it, but it's always nice if you have someone you can turn to, like your IR rep, and they can say, hey, this was really good, or this point seemed to resonate with them. This one, maybe not so much. Let's change up our tactic on how we communicate this. So I find that the more it can be a relationship and a collaborative effort at the right time, the better, personally.
Awesome. Somebody was asking the Q&A there, Charlie, whether you let your CFO and CEO do a lot of investor meetings on their own. Has that changed now? Like as you've been in the role for longer, do you attend less and less of those meetings?
So I actually the other way is kind of how it's evolved, where I do more and more of the meetings on my own. So pretty much if anyone calls Marathon, regardless of if they own one share or they own 100,000, they typically will speak to me. Fred will do most of the in-person conferences, and he and I will go to those together typically. And then, but then if it's at a point where if I've spoken to someone 3 times, they just kind of need to check a box, right, and like make sure they meet with management, then we'll be on a call together. But I try to sit on as many of those as I can. And part of the reason, even if it feels redundant, is at the end of the day, like I need to be as much of a consistent mouthpiece for the head of the company as possible. So the more practice and repetition I get in terms of how he is talking about the story and how his narrative is evolving, the better, right? And then the more that he and I can go back and forth on, hey, this worked, this didn't, right?
Yeah. Well, and that's actually kind of an interesting thing when you think about, we keep going back and forth on these qualitative and quantitative things, and the quantitative ones seem to be very focused around sort of meeting and market cap and trading volumes and stuff, which is all good. But to Alex's point, like sometimes have nothing to do with what we're doing as IROs. Your comment on like you taking more and more of the meetings, I feel like that's a really great qualitative metric to track, right? Is like how many of these meetings and how many of these investors are you just managing on your own? Because I'm sure as much as the CEO or CFO like to take some of these meetings with investors, it's nice to have some off of their plate, where they don't feel like they're sitting in meetings back to back every day.
Yeah. And it's honestly just practical. And like some of that is, again, we're a 10-person company, right? Like Fred's got to go run the business, like talking to investors is really important, right? We are publicly traded, but the more that you can, the more you can delegate more efficiently, the better, right? So there's a mix there, but yeah, delegation's hugely important. I think that's where an IR team, either internal or external, can be really valuable, right? You have a resource that can help take some work off your plate, allow you to operate better. In theory, that allows you to execute better, right? And then you can communicate that execution back to investors more effectively. So in an ideal situation, it's a positive feedback loop.
Yeah.
And just to add to that, to what Charlie's saying, as an advisor from my vantage point, there's no substitute for what Steve and Charlie are doing, right? As an external party and as an IR firm, we prefer and oftentimes we place investor relations officers internally because we totally agree with you, Mark. Having the bandwidth lifted from the management team is ultimately such an amazing sign of value. Now, I think that there is no substitution for some management access, but I think the things that Charlie and Steve are doing are invaluable and stuff that truly an IR agency cannot replace. And so that's it. It's a really, really important thing. And I think that as I've seen the landscape change over the last 8 years or so, I think I see more and more partners say, let's make sure you have an internal resource and we'll work with them. Kind of similar if on the PR side, most PR agencies are working with a chief communications officer, and so it's kind of similar to that evolution of it.
What are some of the other things that you would say are, maybe Alex, we'll start with you, because what are some of the other things that you would say are those quantitative, I keep getting my qualitative and quantitative mixed up today. Some of those qualitative things that you can track. So it's like taking meetings, taking, time off of the CEO, CFO's calendar. You talked about, how can we ensure that we're building the right narrative in the market and that's being perceived accurately. Like, one thing that we haven't really talked a lot about is sort of monitoring the existing shareholder base and alerting, the management team to risks. Like, that's one that we see a lot. Like, what else are you seeing as priorities for your clients?
Yeah, I mean, that's a really important one, Mark. We've been a part of numerous conferences set up by sell-side analysts, and there are activists on our schedule. And it's not so much that I would say a management team should never meet with an activist investor. That's not what I'm trying to pontificate on. But what I am saying is that I want my CEO and CFO to know if they're meeting with an investor that is an activist investor. And most of the time, we should still take that meeting. But the idea that they wouldn't know, that's a huge qualitative value add, seeing around corners, making sure that as ESG metrics become standardized, as different rulings come out of the SEC, Steve, I'm sure that, Gary Gensler's remarks this past week on SPACs and the, expectations of that were hugely valuable, right? Because it's a top of mind thing for the SEC right now. And so when you think about all of these things, are you closing the feedback group with management where you're actually making them smarter heading into these meetings? And I think that's something that's hard to quantify, but it can always be a part of the prep that you're doing.
Yeah, and if I can just add to that, Mark, that's actually personally for me been something. So Marathon works with Irwin, like, full disclosure for everyone listening. That's been a really helpful value add is the background information that we get out of the system that you guys have. Because as Alex was saying, you never want to go into a meeting and not know who you're speaking to, right? Best case scenario, you've chatted 3 times and you pretend you think it's the first time you've met them and it's just embarrassing and it looks kind of sloppy, right? Worst case scenario is you don't understand what the investor's perspective is, what they're looking for, and you end up telling your narrative from a position that doesn't resonate with them, right? So it is very helpful to understand, is this more of a value investor? Okay, let me talk more about like my earnings or my free cash flow, right? Is this more of a growth investor? Let's focus on that. Does this fund have a heavy ESG practice, right? How do we tailor our narrative to that? So having the background information, and you get some of that, right, as soon as you start talking to people, and people usually give you an intro on who they are. But I think having that information in advance and understanding how you can curate or tailor your narrative to fit what the investor is looking for is really helpful. Yeah. And some people are great in the room and can do it on the fly. Otherwise, it's very helpful, I think, to have an investor relations person who can help coach the management team on how to do that, right? Or at least give them a reminder, right? It's like, hey, this person we met with a week ago, here's what they asked, here's what they wanted to focus on. Let's try to highlight these points of the narrative.
Yeah, no, I think that's great. And we did a survey last year, and one of the pieces of feedback that we got was a buy-side survey. And one of the pieces of feedback we got from the buy side was that they feel like a lot of teams don't do enough prep. I think that point of like, part of that, the value is like the IR team doing that prep so that the C-level executives can walk in feeling like we know everything we need to know about this meeting, right? We know who we're talking to, we know what they care about. And I think that maximizing that time is extremely important. Steve, anything else on your mind where it's like, these are red flags or things that I'm sort of always watching out for the management team that they appreciate?
Yeah, I think it's just being a walking perception study, and that all of this sort of falls into that strategic category. That I'm having conversations with the sell side and buy side, on a regular basis to where I can provide that information on a weekly basis. These are the hot button key debates in the stock. This is what investors are saying or thinking, and this is what we need to do to change that. And then that feeds your materials through the quarter. And it also helps feed the strategic decision making at the board. If you're delivering to the board, I'm providing a report on a weekly basis on some of the IR activities, and sometimes that'll drive bigger decisions, bigger conversations around where we need to go.
So you've all talked about sort of tracking conversations and tracking, trends and things that people are saying. Are you all relatively focused on sort of CRM and like using some tool, whether it's an Excel spreadsheet or whatever, where you're tracking sort of all the conversations you're having and the things that are coming up and any of the maybe issues or red flags? And then are you all doing that? And then how often are you maybe reviewing that with the management team to say like, hey, we're having these meetings and this isn't landing properly, or like people aren't understanding what you're talking about?
So I'll go quickly and then I'll turn it over to my panelists here. Like right now, I don't have any CRM tools. So I'm sort of using Excel. And I think when you're at that level of tools or minimal level of tools, it makes it harder to track some of the other things, like, or at least in detail. Like the beauty of having a CRM tool is that you can input in more detail this question, this topic. Maybe you want to remember an exact quote or something that person said. And that's where the CRM tool becomes really important. And also some of the data on trading and position size can help as well.
Mm-hmm. What about you, Alex? Is your team using some sort of platform to like actually track what was said in the meetings, not just that they happened, but what was said and topics that came up?
Yeah, I think a CRM it's table stakes, honestly. And I think listening to what Steve just said, I think that, it sounds like you're going to go get a CRM eventually, right? Like it sounds like the CRM is definitely like just something that is invaluable because especially as you've been public for a few years, the idea that you're going to remember this investor part of your roadshow from your secondary offering 3 years ago when you were in 12 meetings that day, it's impossible, right? And so you need a tool like that that's going to be your eyes and ears and be that prompt. But what I would say about the CRM and what's really, really difficult about a CRM is that I don't know a management team that's necessarily pumped to review the CRM, And so I think I think you have to show the value there. And I think that's on us as IR practitioners to manage our management team and show them the value through different ways, whether it's your ability to see around a corner because you had that meeting, or, you're able to prompt a question, or right before a meeting, you say, hey, remember they asked this last time? I actually know that because of our CRM or something like that, where you can actually show the value, because I think the idea that you're going to have kind of a kitchen table talk every 6 months around the CRM, I think it's a little pie in the sky.
Yeah. I think that's fair. I think, didn't mean it to be a self-serving question given that we're a CRM provider, but I mean, I think that, we see a lot of people who, they track all the meetings they have, they track what's said in the meetings. What they then try to do is just really summarize like what was a key issue or a key topic that was discussed, and then pull reports out for management. Not to say like, let's review every meeting that we had in the last quarter, because to your point, Alex, nobody wants to do that. Like it'd be pretty dry. But to say, okay, we had this many meetings, and in 30% of our meetings, this particular issue keeps coming up. And we don't, and you made a point earlier where it's like, we don't have a very good answer for that question. And so maybe that's something that we really need to work on. And that I think comes back to that idea of like, how do you be the trusted advisor? How do you sort of identify some of those blind spots and call them out for the team so that they can prep for those next few meetings?
Yeah, if I can interject, I think this is a good segue to answer one of the unanswered questions on increasing your trading multiple, because I think it's really that listening tour you do and collecting the information that's out there helps you drive the multiple higher. Mm-hmm. And the really front and center example from my past was at DFT data centers. We were probably the least liked data center company in data centers when I got there because our business model was the opposite of Equinix, and no one liked the wholesale business despite having customers of Microsoft, Facebook, Google, Salesforce, and Apple. And what you had to do is build what I call this the MVP slide in any investor deck, and it's sort of a football field of you and the 4 or 5 companies that you compare to. And what you're trying to do is drive what your shtick is. And so in that case, we were industry high EBITDA margin, industry low G&A. We made a lot of money and didn't spend any of it. And it made it very easy to then call out, these are the 6 differentiators of our business model from the other 6. And then over time, as you read the reports, start to understand the trading multiples and things, that's what allows you in, say, a year, especially if you're executing. The execution is probably the most important part. If you don't execute, you're not going to see it in the trading multiples. But if you can put the breadcrumbs out in either the deck or the SEC filings or the investor call, that's going to get people to engage with you, turn that outbound inbound, and get the multiple higher over time.
Yeah, awesome. Great. So I'm just looking at the time here. It's been great conversation. We've got 9 minutes left. And so I wanted to just look here and see, we've got a couple of questions that haven't gotten answered. And Steve, thank you for addressing that one. One of the questions that we got was around ESG and whether any of the panelists have experience from monitoring an ESG perspective and ESG priorities, and whether there are any metrics that you've seen management teams tracking from an ESG perspective.
I'll take that one because I get asked that every day. There's no shortage of questions around Bitcoin mining and its environmental impact, right? Or the power we're using. It's a very, ESG is a very real thing. Every investor that I speak to is interested in it. For some, it matters more than others, but it comes up in pretty much every single call. And for good reason, right? I do think people sometimes forget that there are 3 components to ESG. And so you can pick which parts of the narrative best fit you, right? Or most appropriate for your values as a business or where you can have the most impact as a business. For us, what we've had to do is go a lot to our operations and generate some case studies based on how we're performing or where we're pulling our power. So just for anecdote, in the Bitcoin mining space, there's a lot of people who think that Bitcoin mining uses as much energy as a small country, or most of the, or it's burning coal, right? Or it's a lot of fossil fuels and it's facilitating the use of fossil fuels and prolonging our dependence on them. What we've done, and this is something we've done also with the rest of the industry. So it is something you can do with peers. It doesn't have to be your company in isolation, right? Is what are the actual metrics around this? So does Bitcoin mining, for example, use as much energy as a small nation? It does. It also uses a fraction of 1% of the amount of energy that we waste every year, whether that's in curtailment of renewables or in transmission lines, right? So which of those metrics is the more advantage or is the more objective to measure it to? It also uses, less electricity than gold mining, right? Or aluminum smelting. So you have to figure out, it's just like when we're looking at anything, you have to set your basis of comparison and make sure you're looking at apples to apples. And I think that can be done with looking at not just your operations, but also the industry as a whole.
But then, Charlie, I guess the question though is also so to go out and get that data and tell your story, right, and have obviously a solid answer to that ESG question is really important. But how do you, or do you measure whether it's actually resonating with investors? Do you look at whether you're being included in certain funds, or how do you do that?
We do. For some, it's, and this is again the art and the science thing. You can look at, there are probably ETFs we could be monitoring more to see if we're included in some of those or not. But so far, and probably because this is newer for our space, it has been very anecdotal. But it is a conversation. It is something that we have to educate people on every day. So, for example, Marathon, every miner that we're deploying going forward is, what we've announced at least, is the majority of them are going to be on wind and solar farms, which are operated by one of the largest renewable energy power producers in North America. We put a press release about it out, right? So we let the world know through typical public company disclosure, but that doesn't mean that it resonates with everybody. So going out and consistently educating people on that, making sure that it's hit in every meeting, making sure that people actually understand that is something that is important. And I think it just, it requires repetition, right? So if that is a top priority for us, it's got to be repeated in the investor deck a couple times. It's got to be repeated in conversation a couple times. And if we get to a point where the question changes or the way it's phrased changes, then for me, I kind of know that it's resonating. So I'll give you an example that's non-ESG related, just to make this a little more tangible. A big thing for us was differentiating our strategy from the rest of the industry. And the question used to be phrased, hey, everyone else in your industry has this strategy. You guys are doing something a little different. How come you're not doing what everyone else is doing? A few months, and then we really pushed our strategy, really harped on it. A few months later, the conversation became, hey, you guys have a really interesting strategy. How come no one else is following your strategy? Right. So it's the same question, but just if you can tell that the way it's phrased has like changed in your favor, then that's also a way of indicating, I think, that your narrative is resonating with people.
Awesome. I have one last Q&A question. We've got sort of 4 minutes left here, so not much time. And I want to give Shannon a minute here to wrap up. So, Alex, I'll maybe point this question at you because I'm sure it's something you run into with your clients. The question is, if management expects IR to increase sell side coverage, how much is IR really able to influence this beyond relationships and engagement versus management just choosing banking partners that offer coverage as a result of raising capital or M&A activity? So to summarize the question is like, can you really get coverage without having to pay for it?
I think there is an educational process here, whether it's discussing MiFID II with your management team and letting them know sell side analysts are at an all-time low in terms of supply and all-time high in terms of demand, in terms of the number of public companies. And so the idea that through communications, you're going to secure an initiation, which is typically economically incentivized by the broker firm, is low. And so I think the question is relatively comprehensive, which is beyond relationship and engagement. I mean, that is a value add, you can go secure conference attendance, you can go secure introductory meetings, you can begin to build that relationship. And what I share with clients is that a sell side coverage program is an 18 to 24 month endeavor. And there's no way around that. And obviously banking partnerships is a key piece to it, but putting that on the side, this is the relationship game, and you can begin to see the fruit of what a relationship with a covering analyst would bear before they initiate coverage. And so that's how I would frame it with my management team.
Okay, cool. Awesome. Well, thanks everybody for your time. A lot of good discussion here. Shannon, I'll hand it over to you to wrap things up.
Great. Thanks, Mark. And thanks, everyone. That was a great discussion. I think we easily could have gone on for another hour. Thanks again to Irwin for sponsoring the program today. That concludes our webinar. As a reminder, IRC credential holders can claim 1 professional development unit for participating today. And we hope to see you all again soon. Thanks again.
Thank you. Thanks, everyone.
Bye.